Arrowhead Property Fund plans to buy the units of Vividend Income Fund, which it doesn't yet own. And Arrowhead Chief Operating Officer Mark Kaplan joins us now for more. Hi Mark, give us the landscape of this deal, the two companies, and tell us the story of what's happening here.
So what we had was a lot of listings really in the property sector over the last few years, and people have been speaking of consolidation starting. But I think everyone knew that consolidation was next to follow. But I think the real trigger was really a rise in the cost of capital and debt, or equity and debt. You know, call it 75% of the funds that we raise are equity and the 25% debt. And there's been a significant increase in that since May last year, when Ben Bernanke spoke about tapering off on the quantitative easing. And since then, really the cycle began slowly. And what you've seen now in the last couple of months is a lot of the better performing listed property funds looking to acquire their peers.
You've used really interesting terminology in your press release. You say you have a firm intention. One then deduces from this that there must be other processes or hurdles that are still need to be cleared before this deal is finalized. Is there anything significant that you have to contend with?
So, just to give you a little bit of a little bit about the deal, we acquired 31.7% in December from Coronation on a share swap basis, where we issued new shares to Coronation and they took shares within Arrowhead. We then did a deal with Stanlib, whereby we've got an irrevocable for them to support a scheme of arrangement, which will go to Vividend unit holders. Really, what we need to do is, with the remaining 100% less 31.7%. We need to get 75% of that to effectively take over the whole of Vividend. We've got Stanlib to support a third of that. They're 22% of the current total, which would be 22 out of the remaining 68 odd percent.
Wayne, you got your eye on this?
Mark, when you look at the property field now, exactly as you said, cost of capital's up, share prices have reversed quite dramatically, so it's not really worthwhile issuing equity now. But yet property prices haven't really moved yet. So when you go and buy a property, you can look at your funding structures, but when you look at the asking yield that the seller wants, the two just don't make sense. Do you think the physical property prices are going to come under a bit of pressure? Because quite frankly, it's not economical to go and buy one now.
I think that's exactly what's going to happen, and I think we're starting to see the beginnings of it now. Really what's happened is the disciplined property companies will adjust their acquisition yields, their requirements. So our cost of capital's moved about 200 basis points, so we're looking at yields higher than we were before. Our acquisition yield always has to be higher than our cost of funding. And I think that you're seeing that the ones that haven't been disciplined with that either have very slow distribution growth or are actually being swallowed by their peers.
Liston?
Yeah, I guess the whole story of property, it's tied into the interest rate pattern, and we've certainly seen quite a knock being taken in that area. But it's been growing enormously. I mean, I can go back only a few years, and I don't think we even had one property company knocking on the door of the Aussie 40, and now we have a number that have significant market capitalizations. So again, is market capitalization something that's driving this?
I think it's important for funds to be liquid, and the larger your market cap is, generally the more liquid you are. So I think what you're seeing now is that the investors are becoming more selective with which funds they would like to invest in. And what's happening is the less liquid funds are going to be swallowed by the more liquid funds, bigger funds, better performing funds.
Just give us a picture of Vividend and why you want it. What does it do?
So first of all, Arrowhead buys stuff that's yield enhancing, that our acquisition yield's higher than our cost of funding. We were able to do that with Vividend. Vividend's got a better quality portfolio than Arrowhead, so not only are we able to buy something on a yield enhancing basis that will provide good returns for our shareholders, we're able to improve the quality of our existing portfolio. It's about 50% retail, 50% office. One major asset, which is 25% of their assets, is Access Park in Cape Town, a tremendously performing asset.
Where do you see most of your growth coming from in the future? Is it going to be retail or office? Which one are you leaning towards?
For us, we don't really focus on any particular sector. We've even gone into residential at the moment. We're opportunistic in terms of making sure that we acquire at the right yield.
How do you go into residential? I mean, you can't buy a house. Lots of houses. How do you do it?
So what we've done is we've bought, our first acquisition was we bought a lease from Monash, with 2-year lease from Monash. We bought that from Standard Bank. It was 150 million in Honey Park on a 12% net yield after VAT. And we've also bought a portfolio of 31 buildings from GICA. and that's a portfolio of 366 million odd.
I've thought that residential property has been totally underrepresented in South Africa as an investment for listed companies. It's individuals who buy houses. Is that changing?
I think it will change. I think if you look overseas, that 10 to 15% of the listed property sector in the developed economies, that residential is 10 to 15% of those economies. Here we're looking at sub 1%. And I think recently what you've seen is we've started. You've got Octodec and Premium before us, and then what you've got recently is SA Corporate also looking to come into residential. So I think what you are going to see over the next few years is residential becoming a bigger percentage of the total.
Yeah, look, I think that's quite logical. You know, the bigger property companies can develop probably at a lower cost of capital, which means their units will ultimately be more competitive and on a more professional basis. I mean, obviously there are big residential property developers, but a lot of residential property, if not the majority, is literally the bucky builder, 1 or 2 houses. You know, a person will buy it, never finished properly, they never got recourse. The builder's always short of money. So it's actually a lot of our house building is actually, I wouldn't even call it semi-professional, it's actually relatively amateur. So I think there is a big space because you can come in and do at a lower cost and probably better quality. But there are some large residential developments in the pipeline now. And I would sit back a little bit and wait. But certainly when you look at Waterfall, or you look at some of the really big established residential units, they're actually incredibly successful.
If I can just come in as well, I think, you know, one of the problems we have in South Africa on residential is indeed, you know, the kinds of things we had back in the 60s of rent control. It's still very present in India, and I think anybody who goes into that must look forward for some time. Either you sell off the units individually, which is obviously one of the tricks that you can indulge in, but where you've got, you know, large blocks that you intend to hold, rent control, government interference, the problems of protection of the tenants these days, difficulties of eviction. I don't want to paint a nasty picture, but it would not be my first port of call, although I actually am a landlord in my own right, so I know these problems.
You have painted a nasty picture, that's okay.
Mark, thank you so much for joining us.